People have short memories. In the fall, less than a year ago, we had billions of equity disappear overnight when interest rates went to 7.25%. That's 10% disappeared in the market in the fall of last year. And I'm telling you folks, the fuel to the flame is high interest rates, and we're on a even worse and higher track coming into what is the slowest time of the year for Florida, the fall of 2023. Welcome back to the channel. Home sellers across Florida are in shock, not just because hurricanes are lining up, but folks, the marketplace went cold June, July, August, overnight. And there are marketplaces in Florida that were in the top of the Shiller index that just came out 4 days ago, showing prices are in trouble in some of the most darling Florida cities that by and large have ran the headlines as being super popular. But that's not all the news. On the other end of it, we've got Florida marketplaces that set records in that same Shiller index, where prices in this one specific area have gone ridiculous. Record highs again. They peaked last year at the top of low interest rates, and they peaked again this year. They went to new record highs in one particular market, but by and large, all the rest of the headlines for Florida is that we could be in for a very, very cold winter. Now, I'm gonna show you why this is the case, but more importantly, I'm gonna go and give you the top 4 marketplaces, the coldest places. If you're in the market to buy a home, these are where the sellers are most motivated. I'm gonna share with you those markets in Orlando, Jacksonville, Miami, and Tampa. And if you're a seller, if you're considering a sale in the near future in any of these markets, I'm gonna tell you folks, if you live in these areas, you are gonna wanna head for the hills. Not investment advice, but I'm telling you, on the trajectory these areas are on, if you live there, you need to get ready and plan and move up your sale. Well, let's jump into the news, the headlines, and the data. All right, folks, herein lies the problem for Florida. News around the country broke in June that it was one of the harshest summer selling seasons on record, kind of compared to when the entire market locked up in 2020, when we entirely shut our economy down. From January to summer to June, we had an entirely different pace of market where people were buying. People that even held on their 3% interest rates were even considering putting their houses in the market, and did, in order to move across the street, take on a higher rate. You had a little bit of a lower rate season right here where it was about 6.5%. And then in June, Powell has been continuously pushing on interest rates, folks. And as he did, we had interest rates spike to a 20-year plus high at 7.48%, folks. This was the highest rate we'd ever seen since, in terms of this post-2021 run-up in home prices. Interest rates stalled the economy last year. You're gonna notice that right around October of last year was the previous one-year high. We had had rates far below that consistently for almost 8-9 months. And then in the summer, right as we started to kind of crest into our peak season, where seasonally people are wanting to move in and out of homes, we had an absolute brake check and interest rates hit 7.4%. Look what happens in Florida, folks. This is direct data of the average home price in Florida. Now, you're gonna notice that last year, average home prices just grew from 2021 all the way into 2022. As you can see in the prior year, last year, we had home prices down here run up towards 7%, shock the market. Look what happened to housing prices. Florida was a average price last summer, May, $602,000. Look at this. By December, it was $527,000, a difference of 75 grand. So you're talking 12%? Fast math, I'm doing this top of my head as I'm shooting this video. You have right here, we were a peak again. Look at this. We didn't even make the peak of a year prior in Florida. So May of this year, prices rebounded as interest rates stayed low 6%, kind of bouncing around 6 to 6.5. Look at this on the 30-year. By the way, folks, when I'm telling you 6.5, that's for people with excellent credit, 780 FICO and above. When people start getting interest rates here at 7.5 on the average, people with good credit, which means some folks are getting 8%. If you have investors looking to buy a house, then those folks are getting 9%, 8.5, 9, 9.5, 10 for second home, vacation home. The investment market got killed as interest rates went that high. So all those folks left. But the reality is that the Realtors Board even reported that people in the cash buying sector also pulled back. That's interesting to note because it wasn't just finance buyers who backed away from the market. Everybody feels like cash buyers are always going to bail out the economy. Well, I see the interest rates are high, but people are going to pay cash. Florida, my marketplace has 40% buyers are cash. No, folks, you don't understand. Cash buyers are the smartest in the bunch because they don't have a mortgage to backstop and share some risk. All of their money goes in the house. So a cash buyer thinks if my house is going to go down in value 3 months from now, I'm going to wait, right? Nobody wants to catch a falling knife. You've heard that adage before. And even cash buyers pulled away. In June, we had this fall off, and look what's happened so far. We had a $601,000 average price. We're now down 5% in 2 months from May. Now, folks, I will give it this. The May to July dump last year was much steeper. Okay, it was higher than 5%. It went from $602,000 to $562,000, which is a difference of like 7 to 8%. Okay, but we're not far off. And I got to tell you, folks, interest rate pressure is still there. You've got Jerome Powell coming into the fall season, folks, coming into the marketplace we're going to next, is now struggling with the fact that core inflation is still incredibly high. Service sector costs are still really high. And every chance he gets to send messaging to the public, he's constantly telling investors that we're going to have higher interest rates. And you can see, folks, there's a direct correlation. As soon as interest rates get bad, you all of a sudden see the news trickle into the marketplace, and not only do the finance buyers back away, but then also the cash buyers back away. The reality for the market is people that need to sell have way less people and way less demand for their home. Check this out. Right here in the middle of the page, this is according to National Association of Realtors. This is the millions of homes on seasonally adjusted rate. So what this shows us is that on the typical time frame we're on right now, if you annualize how many homes we sold last month, we're going to end up selling right around 4 million homes nationwide. You can see it's slammed down where January was. January was, you can see where my cursor is pointing, that was a bottom. And this right here was shutting the entire economy down. Look how low it is, folks. We don't even have an idea of demand this poor except back here in 2010 to 2011 when home prices were flatlining, going down to the bottom, record lows. And again, folks, all this means buyers are pulling way back. And what this further means is sellers are then forcing themselves to be in positions where down market times are now going to stretch back out again. You're going to have price cuts growing. You're going to have people cutting the price. The motivated sellers that need to sell are going to cut. You're going to have buying opportunities in the fall. I'm not saying you should buy, and I'm never giving investment advice in this whole time, whether that's to sell or buy. But I'm telling you, folks, you're going back into a similar cycle. Now, I think psychologically, this fall will be different, right? I think last year, there was this hyper freak out. You got to remember the marketplace in buying and selling houses is a herd mentality. Everybody's not thinking, linearly on their own. They're looking at what everybody else does and they're listening to the news. Well, you've got this herd of people in last fall's cycle that had heard how crazy the market is and had been gangbusters, impossible to buy, and all of a sudden it slams to a stop. It's the first break in the cycle. And now everybody's like, is this a crash, right? The news was everywhere. Are we going to crash now? And so that psychologically really created massive fear that there's less of it now. Now, the major headwind is lack of affordability. Huge headwind on the market right now. The second part is you got less supply because marketplaces to keep going need churn. They need turnover. And when you have all these people with low 2-3% interest rates, your interest rates go to 7.5%, that becomes logically untenable for a lot of people. And all of a sudden, a lot of homes that were on the market when interest rates were at 6.5%, even those people are packing it in and going home. But let's go to the headlines. The winners and losers of the day, according to the Shiller Index. The Shiller Index is a national, well-trusted index. It's a 3-month rolling average that comes out. It's a backward-looking view. It indexes the largest marketplaces in the country, takes entire metro areas, and looks by price gain, price loss. Anything that recorded a sale in all these major cities gets indexed, and it's either a presentation of gains or a presentation of losses. And as I mentioned in the opener, one of our marketplaces was a gainer and one of them was a loser. Let's take a look. You have right here in the upper 20 metros of the index that had year over year declines. So you have San Francisco leading the list at 9.7%, Seattle, Vegas, Phoenix, the typical offenders. Price affordability just coming back to normal. People there finding those prices untenable, and it's slowing their economy down. But lo and behold, the darling of 2022, Tampa, the marketplace Zillow said January of last year would be the hottest marketplace of all time, top the list everywhere, is now on the list slipping, okay? Now on the other side of that, we have the new metros that hit highs. You have Minneapolis, Washington, D.C., Boston, Charlotte, Atlanta, Detroit, Miami, New York, Cleveland, and Chicago. Okay, check this out, folks. And it's not really a surprise. New York and Chicago are feeder cities that actually inflate Florida quite a bit. So that's an interesting thing. And when you see those marketplaces getting really, really hot, and a lot of the people from Chicago and a lot of the people from New York have the ability to put their house on the market again and get record numbers, they're going to come to Miami and dump it back into Miami market. So a lot of these markets are tethered together, as you can see. Now, the interesting thing is a lot of Chicagoans, a lot of the folks in that region of the world, I've done videos on this before, like Tampa. They like the Gulf Coast. A lot of New Yorkers, they love the East Coast. They like Miami, and they'll move up and down that coast. So the interesting thing right here is you've got Tampa seeing a little bit of a softening, Miami being preferenced, and as a result, folks, you've got the markets changing. So while I'm not going to do a market by market review today on Jacksonville, Miami, Tampa, and Orlando, I will tell you this: Miami is on steroids. It bumped a high last year and started to come down, like all of Florida I showed you last fall was coming down, and it tore a new record ceiling this year. None of the other markets did that in terms of its affordability and home prices. All the other markets in Florida, Tampa obviously, because it's posting losses now, you have Orlando, Tampa, and Jax, they saw some reprieve with lower interest rates from January to June, but they did not experience what Miami. And Miami is max unaffordable, still record low inventory, where you have Tampa, Jacksonville, Orlando, all seeing day on market times that from January of this year to June, we're going down, down, down. Houses selling really fast. Inventory levels going down, down, down. Nothing to choose from. Even though the interest rates are probably scaring off home sellers with low interest rates, you're still seeing inventory in these other three markets other than Miami starting to climb. They're going up. And when inventory goes up and day on market starts to go up, it's 30, 60 day reaction time after. I expect between now and September, you will see further changes to the average price in Florida as home sellers have no choice but to cut the price to sell in a marketplace where home buyers have pulled way, way back. Next up, I promised to share with you the zip codes, the cities in these particular metro areas that are most in trouble. I'll even throw in a couple that are doing well so that you can understand, hey, you know what? If I look in these areas, I might have a strength in negotiation. If I look in these areas, I might have a challenge. I might have to work hard to get it. By the way, if you're a seller and you're in these particular markets, you're planning to sell, you got to know what you're up against. If you're in these marketplaces, you got to know that if they made this list, day on market is getting high, inventory is getting high, and price reductions are getting high, and I'm ranking them in order. So the ones that have the worst score in these areas, in these marketplaces, you're going to want to be careful in each of these categories. I'm not just going to do Miami and Tampa, but I'm going to throw in Orlando and Jacksonville, but we're going to move through this pretty fast. All right, we're going to start with Tampa. These are the three areas with the highest DOM, highest day on market, highest inventory, highest or majority of price reductions. Now you can see each one has a factor for each. These are going to be the ones that have the highest cumulative softening in the marketplace at large. 34614 Brooksville, 33709 Kenneth City, 33602 Tampa, and I believe Kenneth City is in the Tampa, actually St. Pete area rather, and you're going to notice that these areas are in a MSA, a metropolitan statistical area. So this is going to be the entire Tampa area. These are the top of the list. If you're reading on, you can see Indian Rock, some of the coastal areas right there. But let's look at the opposite for bonus. Look at these, the hottest, okay? These are the lowest down market, least amount of price reductions, and less inventory available to go around. We're gonna fight. Sellers here are gonna demand a lot. 33716, St. Petersburg, 33567, Plant City, and 33613. You can see those right there. Next, we have the Miami metropolitan area. You have 33170 tops the list for the softening marketplaces in the hottest market in the state of Florida. 33170 Goulds, 33405 West Palm Beach, 33167 Westview, 33010 Hialeah, 33306. You have Fort Lauderdale. You have a few more. You guys can see those right there. I'm going to zoom down the list and give you the hottest. You have 33172, which looks like Fontainebleau. You have 33164 Coral Gables, 33025 in Miramar rounds us out for Miami. Now Jacksonville, the starters for the weakness in the marketplace. 32145 in Hastings, 32033 in Elkton, 32266 in Neptune Beach, folks. Go get yourself some coastal property there. 32254 Jacksonville, 32222, and looks like this is a lot of West Jacks. Correct me if I'm wrong, folks from Jacks. Let's go on down. Hottest areas: 32063, 32217 in Jacks, and 32656 Keystone Heights. These are going to be the hottest side of your market if you want to pause and take a look at those. All right, Orlando, here we go. Notice at the very top of the list, 34773 and 34771. St. Cloud. Folks, be careful out there. I believe 773 is the Harmony area, and it is seeing dramatic shift. I'm telling you, folks, the areas at the top edges of these lists have they're most prone to the higher end of these shifts. So when you see a margin shift of 10% on average price for the entire state, these are likely going to be above that mark, okay? And I'm not saying that there's desirability issues, saying you've actually lost value. I'm saying a buyer is going to see options, and certain sellers are going to sell really cheap and affect your price. All right, so you have in the middle of that Paisley, which is some random marketplace up north that I'm not familiar with in our marketplace, 32767. And then you've got Leesburg and Citrus Ridge and Mascot, Grand Island, Leesburg. So you got these northwestern marketplaces also. So it's like these opposite ends of the city kind of thing going on with the cooling effect. Now let's look at the bottom. The bottom, you've got Christmas and Ferndale. Ferndale's null. I don't know if this is actually a valid response. Gotha. And again, these are tiny markets, folks. A lot of these, if you're not from here, these aren't very big. But Kissimmee, 33848. is on the list on the hot side. Orlando in 32803, which is downtown. Kenansville, which is nowhere. It's tiny, okay? No offense to anybody if you're from there. Oakland, again, small town. Oviedo, always hot. Longwood, always hot. Dr. Phillips, doing well. Winter Springs, Castle. So these are all the typical high popularity areas and some few obscure smaller ones on the hotter side of the Orlando marketplace. That's all I got for you this week, folks. Listen, please, if you want to thank me for the content, if you appreciate it, if you hated it, the best thing you can do for me, drop a comment below. If it's hate, if it's fun, what do you think is going to happen in the marketplace? Drop me a comment. I want to hear from you. And also, I plan on doing more content as I promised. I owe many of you city updates that you've asked me for in the past 2 months ago or so. I have not forgotten, and I thank you for continuing to follow and support the channel. If you know anybody that wants to know about Florida real estate, please share this update with them. It would mean a ton to me. And subscribe if you've not already subscribed. We'll talk to you on the next one. Thanks for watching.